So, PCE, as we've talked about on the show regularly, PCE is another measurement of inflation. Echo in the chat says, what is PCE? Personal consumption expenditure is, here's why the Fed likes this indicator. The PCE really focuses in on the consumer's expenses, like really specifically to things that are impacting the consumer. At the end of the day, the Fed's mandate, its main focus is to keep things as best as possible, money-wise, for the consumer. Now, I know a lot of people probably just scoffed when they heard that. They said, come on, that's not really what it actually is. Sometimes people think that, and this does personally kind of drives me crazy when people think that, the businesses of the world and the government and the whole system is just totally against the middle class man. And don't get me wrong, it can feel like that, especially when you go to the grocery store and it's super expensive. But here's the thing. If you understand how the economy really works, what you definitely know is that the middle class consumer is imperative to the rich getting richer, right? It's important that the middle class can go buy Nike shoes and can go on a vacation once a year or twice a year. Like, that's key to a good economy. And it's kind of weird. Like, you got to think about, like, for the rich to get richer, they actually need the middle class to be doing well, as weird as that might sound. So my point about the middle class, right? It's really important to the economy. And so this inflation statistic becomes really important because it's like, hey, we want inflation. Everybody wants inflation to cool off a little bit, right? Because if inflation does not go away, then what also doesn't go away is the fears about recession, right? Because inflation erodes the purchasing power of the middle class. It erodes the purchasing power of individuals. And then they don't go on vacations and they don't go spend money and they don't, take a loan out. And they don't buy a new car. And that is bad for the economy. Inflation erodes the economy. So today we have inflation statistics. Now, many of you guys might be familiar with CPI or PPI, or wage growth is another inflation statistic that we often talk about. Usually comes out with NFP. And we have PCE. So today we have PCE, which is an important one. It will give us an idea of what inflation is looking like in the U.S. We want inflation to come down. That would be ideal for at least for most market participants. If you want to see the stock market go higher, you probably want inflation to cool off. If you want gold to go higher, you probably want inflation to cool off. Why gold? Because gold is very reactive to interest rates, and they're only going to bring interest rates down if inflation is coming down, right? So are we going to be able to see rate cuts this year? That is the question. So let's talk a little bit about positioning first of all. I'm just going to go to my top setups page here on the Edge Finder, and I want to take out neutral readings, and I want to take out minor currency pairs because personally I don't really trade them. So mostly I trade the indices, and I trade some currency pairs, and I also trade gold. So right now, what are we looking at? We have in terms of positioning, I'll tell you where I'm already long. I'm already long Dow. I'm long the NASDAQ. A couple pending things for me would be Bitcoin. I'm probably not going to take a position on SPX just because I already have NAS and Dow, and they're all three are pretty correlated. I'd like to look at the pound. I'd like to look at the Kiwi dollar. It's maybe a bit of a hedge. And dollar CAD might be interesting to look at. Interesting that we've got two USD bullish setups, while we also have a lot of risk on setups as well.
Our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
I do have a position in the Dow as of yesterday. Yesterday, I took 2 new positions on the indices. So far, they're looking okay. It's too soon to call, though, because here's the thing about the indices right now. My goodness, they have been back and forth, right? You've seen just violent turns. Did you guys see, if you're somebody who watches indices, yesterday was wild. Look at yesterday. This is what we saw yesterday. On the Dow Jones, you saw just, parabolic move higher, followed by, and by the way, I did get long the Dow over here. I felt really good about my entry on the Dow. Dow pops up, came all the way back, and now has drifted back into positive territory. So I'm liking that. If we take a look at the daily chart, reason I took the trade on the technical front was really quite simple. We hit this level of support. We bounced around. We were watching the stream. I don't know if you guys were watching at the time, but on the stream, actually, I believe it was James who was on the stream with me, and we were talking about the wick rejection that was showing up on the Dow Jones. So I saw that and I said, okay, I like this. We've really swung back. This was my first attempt on a long position on the Dow Jones, and so I went long with a stop below. So far, it's looking good, but we're just a few minutes away from PCE, which could either help this story or really hurt it. So we'll see. But I have my stop loss in place. I know what I'm going to do if I'm wrong. For you guys' reference, as you're watching, we've got the S&P 500 here. We've got NASDAQ. We've got Dow. Here's the dollar. Here is the euro. Here's the pound, gold, and oil. So I've just pulled them up all on the screen for us just so that we can take a look at this all at once. Okay, so stay tuned. We'll come back right after this breaking news announcement. All right, guys, let's see what we get for PCE numbers. We'll watch the reaction first, and then we'll take a look at the numbers. All right, euro slightly moving, dollar index slightly higher. NAS, S&P slightly higher. No really strong movements just yet. Again, everything's kind of same spot as where it was. Dollar index popped up higher and then came back down. Let's see if we can find out the numbers. I'm going to go to FX Street. Gives me more figures. Hold on. Okay, so continue to cite. All right, we got PCE year over year came in line with expectations. So everything came in line. Now you might say, well, Nick, why is there not a big spike? The reason there's not a big spike seems to be because the data came in pretty much exactly as expected. It's like if you were hosting a party, right? Here, I get this question every single news stream, every single day. Nick, why isn't it making a big move? Remember that it's all about expected versus what actually happened. So core PCE actually came in higher than expected by just a little bit. And PCE headline, the year over year headline, came in completely as expected. Month over month came in as expected. Core was slightly higher than expected. And we can see the overall reaction is just kind of muted from the market. So it's kind of like if you were hosting a party and your mom said she was going to be over by 3 o'clock, and at 3 o'clock she showed up. There's nothing out of the ordinary here. It's not surprising, not shocking, no exciting news. But what if your mom said, hey, I'm going to be really late. Something happened. You'd be like, what happened? Like it'd be, chaotic, right? The difference is when it comes to economic news, or the point is with economic news, it's all about like how surprising was the statistic versus was it not surprising at all. So when it is not surprising like this, when it doesn't really shock the markets are just going to say, okay, whatever. It's kind of, not a big deal, not a big surprise in any direction. Gold's been taking a beating. Let's talk gold for just a second. So I no longer right now have a bullish bias on gold. We've seen this thing kind of come back into consolidation. And I also think that, well, I'll say this. I still like gold to the upside overall, but right now, my difficulty with gold is that price actions kind of slid away from me. So I was bullish during this period of time. I stopped out here. I took another attempt here, stopped out here. So I have made good money on gold. I've given a little bit of it back here recently. So I'm just going to pause and wait for the trend to either, break higher and start moving higher lows, higher highs again. And until then, I'll just stay on the sidelines. Hey, Nick, I just saw this live and I thought I'd stop by to say I really enjoy your content. Your trading style is definitely not the way I trade, but I love the way you're explaining it like you're explaining it to a toddler. It's understandable and clean. Thanks for providing value just during your time here. Thanks so much. I really appreciate that. I'm glad I can help. And I actually, I mentioned yesterday that it's a bit weird, but I listen back to my own content like all of the time, which is so weird because sometimes I like listen to it and I'm like afraid someone's going to see me watching my own content and be like, what the heck is wrong with this narcissistic dude? But I watch it back so that I can listen and see if it came through okay. Because sometimes I go on rants or I like discuss a topic and I'll listen back to it and be like, I explained that terribly. So I'm trying to use it as like a feedback loop. So when I hear people say like, oh, it's explained well, I really appreciate that. That lets me know that I'm improving overall as a in my speeches, if you will. Why is NZD falling? Let's go look at NZD USD for a second because it was on the Edge Finder. Yeah, look at this. Wow. Kiwi dollar. I don't know all the I can't give you like a full comprehensive view specific to the New Zealand dollar as it's not something I really closely follow. But yeah, because the dollar is not even particularly strong. That is really NZD weakness. So I bet you if you pulled up like NZD JPY, this thing's probably a nightmare. Yeah, look at that. Look at that drop. That's a daily chart, by the way, guys. Whoo, my goodness. A 9% drop, 922 pips. What a drop. NZD. What about the Australian dollar against the Kiwi dollar? Yeah, even this one is trending, and this is one of the least trendy pairs I know. NZD CHF. Shoulda, coulda, woulda shorted that one. I'm short the dollar Swiss, but Kiwi Swiss is just a waterfall lower right now. My goodness. Hi, mate. Aussie guy here. Hey, the Twitter people are showing up today. Thank you guys on Twitter for hanging out with me. Also, if you guys are not, if you're watching on YouTube rather than Twitter and you would like to find me on or x.com, my handle on there is @TraderNickFX, I believe. You guys can find me there. Aussie guy here. Got any advice for someone who's 22 with say 5K to play with and has been breaking even for a while now? Also a good Aussie broker. For information, I'm in your Discord. Thanks for all you do to teach. Thanks so much for the kind comment. So 5K is a great amount to start with, in my opinion. As long as you're trading slow and steady and you have a strategy, and also if you're at the break-even stage, congratulations, you've made it past where 90% of traders will go. 94% of traders will never get to break-even. These are anecdotal numbers, so. If you make it to the break-even stage, wow, you did something very hard to do. To get to the profitable stage, I'm sorry to say, is way harder, right? It's like getting to break-even is really hard. Getting to profitable, consistent is darn near impossible. Now, I say that to discourage people who think this is an easy way to get rich. I say that frequently. If you love this stuff and you are like, I eat, sleep, and breathe the financial markets and studying them, then you have a chance of becoming profitable. If you're not in that camp, I would say stick to a demo account, putz around with this as a hobby, but do not put a large amount of money because you can really wreck yourself if you're not like so fully bought into trading. Don't trade with large amounts of money. So in regards to getting to the profitable stage, backtest. That's a big one. Practice your risk management. I have a whole playlist on my YouTube. If you're really serious, go to my YouTube channel, go to the playlist section, and I believe there's like a how to build a winning strategy guide, and there are no cheat codes in that. It is just step by step how to find profitable strategies through pure hours and hours and hours of back testing. Stress testing is another one that I think is important. Forward testing, getting sharp on your risk management. The reason I say backtest so much is because through backtesting, you can find out, how hard trading actually is. Like that's the biggest thing that you'll learn from backtesting, is realizing how hard it is to find an edge in the market.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.